February marks the first full month of Germany's new 2026 financial era, featuring the official end of anonymous crypto trading and the largest tax-free allowance increase in years. Are you actually coming out on top of these changes? Or is the rising cost of Social Security eating your pay increase? In this video, we skip the boring politics and focus on the 4 big changes that actually impact your bank account with a clear strategy on exactly what to do next. In just a few days, many of you will receive your first payslip of 2026. And then you will see that your net salary changed from last year, but maybe not in the way you wanted. If you earn the average German salary of roughly 4,750 euro gross, you'll actually see about 4 euros net more than last year. It's not a fortune, but in a year of massive changes, this news is actually okay. Because at 80k, you're looking at 10 euro less per month, and at 105k, that drop is closer to 30 euros per month. The biggest reason for this is the so-called Zusatzbeitrag, the extra fee public health insurers charge on top of the base rate. For 2026, Germany's largest insurer TK has increased this by nearly 10%. If you don't like the idea of paying more for the same service and you earn more than 77,400 euros, you can switch to private health insurance. This is the only way to decouple your health insurance costs from your rising salary and potentially save thousands every year. If you want to see if the switch makes sense for your 2026 numbers, book a free meeting with us using the link below. Look, I know rising social security costs are not fun. But there's no reason to be negative, because the German government is handing out some massive tax gifts this year that you might have already forgot. So here's a speed run for you. The Grundfreibetrag, the amount you can earn completely tax-free, has jumped to 12,348 euros. And the top 42% tax bracket now starts later at almost 70,000 euros. This means more of your salary stays in the lower tax brackets before the top tax kicks in. And for parents, Kindergeld has increased to 259 euro per child. And the total child tax allowance is now nearly 10,000 euros. If you commute to work, you get the maximum Pendlerpauschale of 38 cents from the very first kilometer. Minijob is now 603 euros per month you can earn tax-free. And lower VAT at restaurants. Germany is actually putting a lot of money back into our pockets. Remember, it's not about what they take, it's also about how much you keep. Talking about keeping. Do you keep cryptos like Bitcoin or Ethereum? Then listen closely, because the Wild West is officially over with the new DAC8 reporting now in full effect. Every crypto exchange that serves customers in the EU is now legally required to collect and report your data. This means platforms like Coinbase, Kraken, and even Trade Republic are now sending your information directly to Finanzamt. Your name, birthday, tax ID, your wallet addresses, and even the values of every buy and sell that you make. You might not like it, but try to see the positive here. This is a massive step towards crypto being treated as a mature and legitimate asset class in Germany. Important: check your emails. Under the new law, you must provide additional information to your crypto provider. If you ignore their requests for more than 60 days, they are legally forced to block your account and stop your transactions. Don't let your assets get frozen just because of a missing tax number. The goal from the regulators is transparency, and as long as you keep your records clean, you have nothing to fear. Plus, remember the German crypto miracle. If you hold your coins for more than 1 year, all your gains are 100% tax-free. And even if you sell earlier, the tax-free limit for private sales has been increased to 1,000 euros per year. So most casual investors won't even pay a cent in tax anyway. Looking at these changes, you might wonder, is it even worth to save in such a chaotic world? And then you might read the quote from Elon Musk. Don't worry about squirreling money away for retirement in 10 to 20 years. It won't matter. He believes AI and robotics will create an age of abundance, where goods are so cheap that money becomes irrelevant. It's certainly a bold vision for the future. And if you heard about the Greenland crisis, you thought there would be no future. Because in January, the headlines were full of terror threats and military tension. It felt like the global economy was ending. But after the Davos meeting on January 21st, the threats were dropped. So Greenland is already becoming yesterday's news. History is full of these world-ending moments that no one cares about today. Whether it was the Cuban Missile Crisis of 1962, Black Monday in 1987, or the pandemic in 2020. These events were scary at the time, but on a 30-year stock market chart, they are just tiny, irrelevant dips. So the verdict is simple. Markets are political in the short term, but mathematical in the long term. And if you let the noise stop you from investing in January, you have already missed 8% of this year's potential. So don't wait for the world to be quiet before you build your future. The best time is to start today. And if you're not sure how, this video will help you out. Thank you for watching und bis zum nächsten Mal.